the national average savings account in the US today has an APY of just 0.42%. And so what that means is there's a lot of money being left on the table by a lot of people.
We are excited to have you. We've got a ton of questions for you to help us maximize our savings. Maybe we start with this first one. Most people are used to saving their cash in traditional bank savings accounts. Think about checking, savings accounts. But there are other types of accounts that can maybe offer us more benefits. How can people navigate all of the different options out there, knowing that there's kind of a ton?
You're absolutely right. Most people are much more familiar with traditional bank savings accounts, and for a really good reason. They've grown up with them. There's a lot of people who actually are using the same bank accounts that they opened up as kids when their parents took them to the bank, when they were younger.
I am a little guilty of that.
Me personally, a little bit of that too. When I showed up on campus my freshman year at college, I showed up in the student union, and there was a table there with a local bank, and I opened up an account with them, and I used that account for years. So a ton of familiarity that people have with banks. But the point here is that there are a lot of other options that are out there for people to consider where they can get more return on their cash. They can see more benefits with their cash. And so that's what this is all about. They need to find opportunities to activate their savings.
I hear of these HYSAs, high yield savings accounts, but banks and brokerages are also talking about cash management accounts and money market funds. Some have FDIC insurance, some don't. It's very overwhelming for me, and I would assume probably the average person. Where do I even begin?
You're right. It can be pretty overwhelming. There are a lot of options out there. Again, most people are familiar with traditional bank savings accounts. They're name brands. Think Wells Fargo, JP Morgan, Bank of America. These are brands that they've grown up with. But there's other financial institutions, brokerages. They offer a variety of different account types, and different account structures for a variety of reasons. You mentioned a couple: high yield savings accounts, cash management accounts, money market funds, et cetera. I could go on and on. That's a lot of terminology.
Acronyms.
A lot of acronyms there too. And it can really, confuse people. And honestly, it can paralyze them, and ultimately results in them actually not taking any action on their cash. So I always try to simplify it for people. I think there's really three main questions that people can ask themselves when they're evaluating options for, a saving solution. So the first is, look at account, and they should understand how much safety is it going to provide for their cash. The second one being, when they need access or use of their cash, how easy is that for them to do? And the third is, they're going to put their money away. What's the rate of return that they're going to get on that cash? So, these three simple questions, they can really cut through a lot of noise and simplify things, and ultimately kind of match their need with the right solution.
So we've got safety, ease of access, and return. Let's start with safety. I know I mentioned a little bit of the FDIC insurance. Yep. Is that where that factors in? Is that where that comes into play?
Absolutely. So for safety, the first thing I think about is this is all about protecting your money, protecting your hard-earned savings. And you're right, this is where FDIC insurance comes into play. Particularly here in the US, it is the primary form of protection, particularly for bank assets. So all FDIC insured products have a minimum of $250,000 of coverage. Now, I say minimum for a reason, because this is a great opportunity for people to shop around for options, because there are account types that offer excess coverage, up to $1.25 million, for example, or even higher than that. Now, the other angle I think about when it comes to safety is trust, especially with your hard-earned savings. You should be doing business with a company, with a brand that you trust. And frankly, this is why a lot of people do stick with their banks. They actually know that there's potential for them to get a higher yield, higher rate of return out there, but they're comfortable and they trust the banks that they've been with for years. They've been with them since they were a kid. Their parents, their friends have all banked with the same institution, but they are potentially leaving a lot of, return on the table. And trust, frankly, this is the reason why Vanguard has entered the savings arena. We're very fortunate to have earned the trust of over 50 million clients around the globe, over the past 50 years for their investments. Think their general investments, saving for retirement, longer term goals like for their children's education, but really, really passionate about extending that trust to other arenas like short-term savings.
It's a really fascinating point about safety and trust, because you think about, for those who are intimidated by all of the options and all of the acronyms and all of the concepts that feel so complex, that trust and safety being at the core of just making sure your money will be there when you need it is super, super helpful. You also mentioned ease of access. Can you tell us a little bit more about that?
Personally, I think about my cash in two main buckets. So the first bucket I call my today money, right? This is what I need to pay for my coffee in the morning, pay to fill up my gas tank so I can get to work, pay for my lunch, so on and so forth. But what I need here is I need more instant access to that cash.
I'm guessing the second bucket is tomorrow money.
Absolutely. You got it right. So you've got my today money, my tomorrow money, cash I put aside for more monthly bills, or all the way to the money me and my family are putting aside for shorter term savings goals, like saving for a trip or an upcoming vacation. The key here is that my today money, that fits more primarily in a checking account type option. But my tomorrow money, I don't need all the bells and whistles that come with a checking account. And so I can put that in a more savings-like solution. But I do still need access to that money for when I need to pay that bill or go ahead and pay for that vacation I've been saving up for. And so what people need to do is they do need to evaluate options side by side on what are the different access points and features that they have. So different savings solutions, they offer everything from access to peer-to-peer payments, next day transfers, a debit card, access to a routing account number, so on and so forth. Really good and important feature set for people to be able to compare and contrast from different solutions.
Really helpful breakdown between the two buckets. And I think about my today money, my latte that I love to get on a special day at work, but my tomorrow money too. What am I going to do in a couple of months on my break to take a nice trip? So really nice way to break it down into those two buckets. So we've talked about safety and accessibility. I feel like we might have left the best for last. Talk to us about the importance of return on your cash. Is this interest rate we've heard of?
Exactly. So, the way that you're able to earn money on your money that's in a cash or savings account is through an interest rate. And that's most commonly known as, your APY, or the annualized percentage yield that you're going to get on your money. So the higher the APY, the higher the rate of return that you're getting. Now, unfortunately, there's bad news here, and that is, the national average savings account in the U.S. today has an APY of just 0.42%. And so what that means is there's a lot of money being left on the table by a lot of people.
Quite low for the national average. So that's the bad news, but hoping you'll be able to give us some good news. And can you even turn these percentages into dollars just so we can feel like these examples are a little more real?
Absolutely. So while that national average is quite low, there are some really strong solutions out there, including Vanguard's new Cash Plus account. It's currently yielding 3.65% APY. That's 8 times more than that national average. So let's turn these percentages into real dollars. So
some examples.
Yeah. So imagine you've got $1,000, hard-earned savings that you've built up, and you want to put that in an account. You put that in an average account, that $1,000 at the end of the year is only going to have returned you just over $4. Now you put that $1,000 in something like Vanguard Cash Plus, you're going to earn over $36.
Huge difference between one latte and many lattes.
100%. And unfortunately, there are far too many people who are in that $4 bucket. We need to get more people in that $36 bucket. Perfect opportunity for them to activate their savings, get that money out of that traditional saving or that checking account and find a different solution.
Now that we know a little bit about what consumers should consider looking for beyond options of a traditional bank savings account, maybe we start with a couple different scenarios. We can run through whether or not it's a good idea to activate your savings or maybe use something more like your today money or your checking account.
Sounds great.
All right. First, activate your savings scenario. You need to buy groceries for the next month, which will cost around $500. Is this an opportunity to activate your savings to pay for this?
Great example for budgeting, right? It's something you need to budget for, whether it's on a week-to-week basis or a month-to-month basis. Not necessarily something you would tap into a savings account for. This is more of what that today money that I was talking about earlier. And this is something you'd probably tap into a checking account to be able to pay for your groceries. So no, not an example where someone could activate their savings.
If you're like me, I like to grocery shop like multiple times a week because I can never plan out my dinners well in advance enough. So I'm there a couple of times a week. So not groceries, but how about a vacation? You're planning a week-long getaway to a tropical destination costing around $2,000. Is this an opportunity to activate your savings?
Yes, this is a perfect example for someone to be able to activate their savings. Take money that's probably sitting in a low yielding or no yielding checking account and find a great savings solution account for saving for this goal. And the reason for that is because you don't need the money today. Right? This is something that you can build up, put periodic payments in over time, and even generate additional returns that could help you reach this really important and fun goal faster. And so saving for a vacation, really great common example of a short-term savings goal. But there are other common examples too, whether that's saving for a down payment on a new car or saving for a down payment on a new home. Maybe it's actually you already have a home, it's for a home renovation or improvement project. Saving for exciting events in your life like a wedding or adding to your family with a new baby. Regardless of the short-term savings goal, perfect opportunity for someone to get money out of a checking account and activate their savings.
I recently got engaged and we are doing something very similar, putting some money away each week, looking forward to a future wedding. So I can totally relate. All right, I'm going to go into the next scenario. For those of us that are saving for our children or grandchildren's education, this has to be a perfect example for activating your savings, right?
I love that you use this example. There's actually a ton of Americans who the way that they're saving for their children's future education, tuition bills is by just earmarking a portion of their checking account for those future payments. The problem with that though is that they aren't taking advantage of all the tax benefits of a certain account type known as a 529. Right? This is a purpose-built account for things like education savings. No different than a 401k or IRA or 403b. Those are purpose-built account types for saving for retirement. So I love that you pointed out this really important savings goal, not necessarily an opportunity to activate your savings out of checking into a savings account. But I will also point out this is where that trust factor comes into play as well. Doing business with a company and a brand that you trust. In this particular example, it's trusting that the firm that you're working with will actually point an important thing like this out.
Yep.
You've got hard-earned savings. We owe it to you to make sure that you're putting that money to the right use in the right account type.
Really helpful also just to break down those longer term goals, some of these big educational savings goals where you can turn different things to think about as you're trying to save for those as well. All right, let's finish it off. One more scenario, our last one. What about money for something like an unexpected home repair? Maybe your fridge breaks, you lose all of your freezer food. What are you supposed to do?
Great example to end on. Yes, this is an example where you can definitely activate your savings. So something like putting money aside for a home repair, that's also a perfect example. It's known as an emergency savings fund. Right? So home repairs are a classic example of potential unexpected expenses that we all know, unfortunately, do come up from time to time. Other common examples would be, an unexpected medical bill that you might get or a temporary loss of income. Personally, my family and I, we had to tap into our emergency savings fund last summer. We came home one July evening and the thermostat was reading well over 90 degrees because our AC broke. But that's why we had an emergency savings fund. And it was building up over time as well. So that money was better suited in a savings account versus a checking account. And I was able to easily access to be able to write that check, to be able to get that new AC unit installed, in time. So emergency savings, great example for us to end on how people should be activating their savings.
Really grateful for your time today. You really helped us lay out all these questions to demystify a little bit on what it means to activate your savings and the different ways that we can do it.
Yeah, there are a lot of options out there, a lot of complex terminology, a lot of acronyms, right? FDIC, yes. CMA, APY, it feels like alphabet soup. But if I would leave people with one thing, it is those three questions that they can ask themselves when they're evaluating different solutions. How safe is my money going to be in that account type? How easy is it going to be to access and use that cash when I need it? And what's the return I'm going to get on my hard-earned cash? right? You can ask yourself those 3 questions that can cut through a lot of that noise and that complexity to help match you with the right solution for your hard-earned savings.
Thank you again for your time today, Andrew. Really, really appreciate all of your insights.
Thanks for having me, Allie.
And thank you for tuning in. If you have any questions or comments, feel free to reach out to us on social media or our website. Until next time, stay savvy with your savings.